Okay. All right. Okay, I'm ready. Okay. Welcome to the KBT Tax Tips for the Year End. This is explicitly for small businesses. Okay. Now, the first thing that you want to do in a small business, the United States government, believe it or not, is considered if you make less than $10 million a year. Okay. So now the first thing that you want to do, this is November coming on to December, you want to review your income and expenses. Okay. You want to make sure that you have all of your rent, utilities, your all of your expenses and income recorded. All right. You want to make sure if you was not good with your bookkeeping throughout the year, that's fine. But what you want to do is you want to call KBT and catch them up, right? Okay. The next tax tip is you want to take advantage of the 179 and any bonus depreciation that you may have or you did not know you had. Okay. Another reason to call Kawana Robinson, right? Then you want to check on your estimated tax payments. So if you file taxes prior years and you have a tax bill and you wanted to like mitigate how much taxes you were going to owe at the end of the year, the best thing that you should have done was mailed in some estimated tax payments. All right. Now, if you didn't do it this year, that's fine. Next year, you can start. But if you get your taxes done and you have a tax bill starting January, February, March of next year, start doing estimated tax payments. Then that way, at the end of the year, it won't be such a big bill. Okay. The next tax tip is to clean up your books. Okay. Reconcile your bank and credit card accounts, write off any bad debts, make sure your obsolete inventory is also written off or get rid of. And that's why you see big liquidation of the year, and that's why you see the big retailers, year end. They don't say it, but it's really because they're trying to liquidate. You also see that with car dealerships as well. Okay. Next thing, do not forget your tax credits. They have research and development tax credits for products or process improvements. You also have your work opportunity tax credit. So please keep in mind when you are hiring employees, make sure they fill out that WOTC, which is if they receive SNAP, if they received any type of government assistance, you get tax credits for that, for giving that person a job and getting them off the system. Supposedly, that's what that's for. Okay. Now, what about your home office and vehicle expenses? If you work from home, claim the home office deduction symbol or your actual expense method, whichever one, and track your business mileage. Now, I'm going to tell you one thing. If you are using vehicle expenses, okay, technically you're supposed to have a mileage log. Okay, so if you have multiple vehicles or if you have a fleet of vehicles that you use for your business, make sure you are having a log of each one of those vehicles. Then that way you can keep up with your oil changes. If you have to get tires, you have to do any major repairs, it's in that logbook. The drivers that's driving or whoever's actually running your fleet, make sure that they're writing their miles down. And then at the end of the year, when you're ready to do your taxes, all you have to do is give me or your tax preparer your mileage book, your log, so to speak. So you remember that for each vehicle, you want to have a log book, okay? And you want to keep up with the expenses of those vehicles individually, okay? And that way it's proved, it's written and documented, and it's much more easier for you to do it, okay? Now, just say, for instance, you didn't do any of these things that I mentioned, which is totally fine. What you want to do is you want to plan ahead for 2026. Okay. You want to review your results that has been given to you from your accountant. Okay. You want to plan your cash flow. You want to plan your tax payments. And you want to have some type of tax planning strategy for your next year, so it won't be so overwhelming or over to the point to where you'll get sanctioned or the IRS will almost want to close your business. Call KBT. Okay, you need to plan for your next tax year. Now, tax laws do change, so I will keep you abreast on the new 2026 IRS adjustments or any type of expiring provisions from our official 2017 Tax Cuts and Jobs Act. Okay? Now, another thing, the W-4s. That is the form that you give to your employees so they can tell you how many allowances that they are taking and that you can properly take out the proper amount of taxes. So what I have found is, I'm going to say 7 out of 10 people do not know how to fill out that W-4. They may have put too many allowances. So that means when you did the payroll, you didn't take out that many taxes. Then at the end of the year, they're upside down. Please suggest that your retained employees, please give them the opportunity to update their W-4, to either correct their W-4 so they can get the right amount of taxes taken out, or adjust the W-4 because they either had a child, they got married, divorced, there was some type of change in their household. Okay? And I would like for you to stay tuned. So daily, or at least 3 or 4 times a week, you will get tax tips, and we will be also launching our KBT Tax Podcast. Okay, so that way the public can talk to me and I can talk to the public, and any questions that you have or any concerns that you have dealing with your taxes, your books, if you want to have some type of tax planning strategy, just stay posted, and we will keep you abreast of all of the things that you need to do or not do in our upcoming tax season. All right. So you all have a great day, and I will see you all tomorrow.